All right, good morning, everybody. So we got the first of the QRA data yesterday afternoon, and I was surprised at how many people said, "Oh man, what the heck is that? What happened to price?" Almost as if I don't do these briefings every day and gave everybody a heads up. Got another one tomorrow morning at 8:30. It's a two-piece event, right? So I know tomorrow everybody's going to be thinking about FOMC and Powell, but you also have to keep in mind 8:30 tomorrow, we're going to get the rest of the QRA data. All right, so just kind of be prepared for that. Hong Kong is down the most, but I did hear a bit more about them this morning. They were going on about the bond that was down significantly, kind of implying that there's more stimulus on the way coming out of Hong Kong. And I don't know if it's to keep their head afloat, just to kind of stimulate their market, then it's not really stimulus, right? It's just a capital rotation. So got to kind of approach those China ADRs, Babu, Bida, PDD, JD. You want to approach them with a little bit of caution, because if this is just a capital rotation, well, then there's no guarantee that those names are going to do anything anyways. It's JOLTs this morning. Number of job openings. I always consider this the take this job and shove it data. How comfortable are you with the idea that you could leave the current job you have and go to get another job? Tonight, going into tomorrow, we're also going to get data out of Japan that's kind of important. So, I mean, this week is just nonstop with the hits. It just keeps coming. Once we get through JOLTs today, there's really not too much on the other side of that. We do have earnings tonight. Microsoft, AMD, Google, Starbucks. So we might see some sympathy plays in shipping names. Seeing UPS got whacked. So 9, 10, 11, and that gets us to the rest of the end of the day. Should be pretty good to go. Just remember, 11 o'clock is an auction today. Those auctions sneak up and get us. So we had the big move yesterday. This now presents like a Busby. The spot gamma levels you don't need to convert them. They just are for it, right? They're programmed in it. Like right now, the red lines that you see here that say vol trigger and 0 gamma, I'm on the ES. They're made for the ES. If I was to go to the SPX, it would recognize that I'm on the SPX and it would give me the SPX levels. So if you're using spot gamma levels, it should be for the ES. Now, if you're using something like Mentor Q, you have to lay it over and then tell it how much you want to adjust it. And I don't like it. You're supposed to put in your own spread and hope that the spread doesn't change. And it's not impressive. It's awesome on equities though. So here's spot gamma. Generally, I share the founder's note each day. And it in the note, it gives these key levels so that even if you don't have the indicator, you can still get at least the spot gamma levels. And that's just what I share in this note, which is awesome. This guy always has something really great to contribute. But then there's the indicator. And so, you know, you got to download it every day. I don't share it because I'm already sharing enough Thinkorswim codes every day that somebody's got to import. But it is just a text document, so I don't see why not. I'll put it in the Discord. And it'll populate. All right, it just says spot gamma daily levels, but so every day I take those levels and I import them onto the chart so that we can see where the call wall is and we can see where the put wall is and the 0 gamma and the vol trigger. It comes with other levels, but I take those out. It's those. To me, they're just annoyances. I've got my own levels. I don't need theirs. We got an MDP this morning, missed daily pivot. We haven't touched it. The channel around it is kind of wide. We haven't touched that either. Although we are breaking right now into new low a day, getting into a new Globex low. Very likely just going to reciprocate on the VWAP, but since I don't know how far away we got from VWAP last night before midnight, then right now we're just looking at a really tight range until this changes. With the jobs data, we're really not expecting much of a change in price until we get some information. Liquidity risk from the overnight showing we don't really have a lot of trading activity yet, which makes sense, but they're not scared because they're not hedging. So the trades are light. They're sitting out waiting for the data, but they're not freaking out. The MDP only really matters tomorrow. It doesn't really matter today, but we would build it today. So we have it right now. The idea is, are we going to keep it? So I mentioned the Busby. When we have a range, when price is in a range, and it finally breaks out, very often after it breaks through that resistance, price will pull back and validate old resistance as new support. I used to teach this all the time, and I got tired of saying what I just said. It's a mouthful. You got to keep saying it all the time. And I said, there's got to be a better way to talk about breakouts that come back and retest rather than having to use that entire phrase. So I named it the Busby. Yeah, I just made it up off the top of my head. Mostly I attached it to a grumpy old dude that was talking about breakouts one day, and he was yelling at people in a webinar. And I thought, man, they think I'm a jerk. So I named it after him. Give him all the credit for it. And that's what we're looking for here. We're looking for a Busby. So price in a range, it finally breaks that range. A lot of times it will do that. The thing is, some of the best trends you've ever come across very likely started with that. That the trend first was in a range and then it broke out. So you can play it a couple of ways. You can trade it back up to the high. That's all that it owes us, by the way. If we do get the bounce, it only owes us back to the top. You can just use the entire pattern, let it get back to the top, and if it breaks out, then it's pretty much validated, you know, a breakout trend, and you could trade accordingly. So a lot of different ways to play it. This is a really big one. Don't normally see them so big, but depending on the time frame that you're using, it's probably not so big. Really, if we were on a 30-minute or something like that, then it wouldn't seem so bad. We are inside week breakout, which is fantastic. We needed to get out of the zone, right? We really needed that kick in the butt to get this market moving. And maybe we got it, and maybe it sticks, right? We don't know for sure yet. So we're inside week breakout. We really need to keep this range broken out, right? We don't want to go back inside the zone. Technically speaking, if we did go back inside the zone, it's not necessarily bearish. Technical analysis wise, it wouldn't make us, you know, weak or owed any sort of reversal. It wouldn't be the start of a topping pattern all by itself. You can see this one red week back here. It's not like we crash and burn because we pulled back for a week. So if we did poke our head up just to drop back down, it's not necessarily a big deal yet. I do want to continue to remind what this chart here is, and just to get these spot gamma levels off of there for a moment. So this is a daily chart of the ES, and down here in pink, I have FOMC and QRA announcements. Notice the tops and the bottoms are accompanied by FOMC and QRA announcements. It's not a coincidence, right? So we're talking about a sea change, a shift in market dynamics for at least the next quarter. This isn't just, you know, I'll trade it to the end of the week, trade it to the end of the month. We're talking about what's the market going to do into May, which is where we will get the next QRA. So we got one back here and we got one right there. Basically did nothing. But after getting that one right there, we had one right here, and that was where we topped out. And from there, we went all the way down here. That's where we bottomed out. And from there, we got to where we are now. Straight shot. You can see that they matter, right? It's kind of important. Unlike an FOMC event where we get that big candle, the big pop that lasts 2 or 3 days, and then that's it, and we're right back to the grind again. This is talking about a dynamic shift of market structure and what we're going to do for the next quarter. So if it's weak, and by the end of the week, we will know everything that we really kind of need to know, then we're going to be looking for sideways market structure, or longs or shorts. I started back here for a reason. We really didn't do much. Got a little negative, come right back up to where we started. It was just a wash. The data today really shouldn't be that bad. It would be a long for months, kind of, right? If you go back and look at that chart, and I've shared pictures in the chat, so it's not like you have to hurry up and catch a screenshot of this. When it went down and it went up and it went, we'll just use this last one from October, right? That was November 1st, October 31st, however you want to do it, because remember there's 2 dates for QRA. This was the last quarter right there. And we're in QRA right now. So that's what happened. So was it along the whole time? Sure. I mean, but there was still some pullbacks in here along the way, right? The question is, if we went to Apple, was Apple also along the whole time? No. Oops. What about Meta? What was Meta doing the whole time? Was that good the whole time? Yeah. So, I mean, you could spread it out, right? Look at something like Pfizer or, I don't know, Caterpillar maybe or something. Some of the names didn't respond at all. They didn't care. They just kept falling. Probably not Caterpillar, but. So does QRA affect whatever it is that you want to trade, say like the indexes? IWM had a hard time with it. So you just want to go out and kind of feel around a little bit. If it's positive, if the market likes what it gets, are we going to get an entire quarter of more bullish action? That's the bet. Yeah. But is FOMC going to squash it somewhere along the way? So for an example, back here, it was negative, and then we got FOMC and it turned positive, and we got right back up to where we started. But we can start positive, and then FOMC can come out, say, in March and crush that positive nature. In fact, we're getting FOMC this week with QRA this week. QRA could be positive, FOMC could be negative, and then we don't get anything. So it's not always just as easy as just turning on the lights. We do want the data by the end of the week to show us a clear path forward. Longs, sideways, short. That's our 3 choices. You can Google QRA announcements and get the dates for 2023, 2022, 2021, and you can go out and mark them on your daily chart. And that will give you a lot more control over understanding the response that we get in the market from QRA. And while you're at it, you can do it to FOMC and CPI, and it's a lot of work, but after you do all that work, just save your levels so you don't lose them, and you're good to go. So for today, we really are expecting a lot of what we had yesterday until we got QRA yesterday. Yesterday, the idea was to sell into strength and buy into weakness. That every time we got against resistance at the highs, you would want to sell it. And when we got into support along the lows, you would want to buy it. That we did not want to trade breakouts. That was kind of the theme yesterday. That we don't want to trade breakouts. And that was a good theme all the way up until QRA. Now, I get it. Every one of these broke a little bit higher. This was our high. We went above it. That was our low. We went below it. And then that became our high and we went above it. The reason it does that is liquidity resides on the other side of the pivot. I'm going to get t-shirts made that say this. So when price gets to a pivot point it's not supposed to stop at the pivot point. When I was new, I thought it was supposed to stop at the pivot point. I would hope that it stopped at the pivot point. I would try to trade the darn thing, expecting it to stop at the pivot point. But that's not what price is supposed to do. Price is supposed to overshoot the pivot point because liquidity is on the other side. And so when we get up into resistance, we overshoot it just enough to trap the bulls, and then we rug pull them, pop their heads off. Same thing down below. Just enough to trick the bears and then flip it over on them. Liquidity resides on the other side of the pivot. What this ends up building is a megaphone pattern until eventually we pop. So don't be fooled. It'll be the same thing today. At least that's what we're expecting today. At any time, it can change, just like yesterday. It started to unravel early. We didn't go from the high back down to the low. We kind of got some support around VWAP and then started breaking out. I think the information got leaked a little early. And so people were, piling into it. The thing is, as long as we're right and that we're going to hold the range into FOMC, then we can wick lower than we did and we can break out higher than we have, but we'll continue to expect to hold the range. That's the base argument, right? The thing is, this really big move is a gap. And price really wants to go back and close that gap. It really does. And so one of my concerns is that we're going to do that. Just like we did back here. That was a gap. And what did we do? We went back down and we closed the gap. I know it doesn't look like a gap. You see candles. But if you were looking at order flow tools like Jigsaw or Bookmap or something like that, you would see a liquidity gap here. And gaps like to be filled. It creates a vacuum. Price wants to go back. It doesn't have to, but it's what we expect. And so that makes me a little nervous about calling range trades, trying to, buy these lows on support, because we could just keep going until we get down here, overshoot the daily pivot a little bit, get back inside previous week's range, get to our ADR half. All of that makes perfect sense today. It would help. It would be healthy for the market to do that. So kind of thinking about that a little bit. What I don't expect today is a breakout continuation yet. I find it really hard to believe that they're going to want to continue that exuberance at this point without more information, namely the other side of the data for QRA. $10-day, 30-minute volume profile. Look at how much volume we put in across those highs compared to the amount of time that we've been up here. So yeah, we got a bit of volume. It's interesting that this volume looks a lot like that volume, which was connected to that big move, just like this big move. I'm a little bit of a nerd that way. And this is a great example of where we had volume, large volume, as we ran up into a ceiling, and yet we spent almost no time there. So I put those two indicators together. So we did get into a lot of volume up here. That's not necessarily a bad thing, just like back here. And even just like right here, we put in a lot of volume there, and we still ended up expanding beyond it. $49.15 is the point of control. It's really close to $49.11 cog line. So I would expect if we do break through to the downside, we get this gap closed, we could overshoot to the point of control, 49.30 and then 49.11. We do have a new VPOC now from yesterday. $49.20. So a break to the downside through our own Globex low. We'll look to close that gap, but the 49.20 is a point of control, so we'll expect that. It's really close to the point of control here on this 10-day chart. So there's just a lot of support, a lot of level there. Don't expect to break through that unless things are really negative. Price alone without some sort of catalyst to put it through there, can't see that we would get through the low of yesterday. We got the move before we got to the kill zone yesterday, which is really odd last night. Normally the move like this happens between 2 and 4. This happened before 2 o'clock. So it's a little odd, and it ended at 2. I'm sure it was directly connected to econ, but I was asleep through that, so I don't know. It just caught my attention that it happened before the kill zone, not during the kill zone. They're already showing a lot of volume across these lows, even though we haven't spent as much time there. So in this drop back, it was shut down, right? It started to fall and it hit an iceberg. The thing is that iceberg enough? Will that liquidity hold? Or are we just going to keep chipping away at it until there's nothing left and we're able to fall through? I did mention previous FOMC weeks where we went to the edge of the expected move before Wednesday. That there's been FOMC weeks where we are just really bullish Monday and Tuesday, and then we stall out Wednesday for FOMC. That doesn't take into account that big QRA move, right? But we didn't get to the weekly expected move edge yesterday. So it wasn't that big. We've had bigger days than that. Back here, we went from the Friday open to, the weekly high in a single day. That was supposed to be the range for the entire week. We did it in a day. Same thing here. We moved the entire range of the week plus some in a single day. So the move yesterday, it wasn't that big. I mean, it was big, but some perspective, right? We're only 1% above the 10-day moving average. So when we look at that move in price yesterday, did we move too fast? Did we move too far too fast? Are we due a pullback? Nope. We're not overbought. We didn't move too far too fast, and it does not owe us a pullback. Not on the daily time frame. We're nearly 3.5% away from the 10-week. There's been instances where we've been farther away than that, but you can probably count them on one hand, and they don't last very long. So we're on the edges of as about as far away from the 10-week as you want to get. Anything more than this starts to call into question our structural levels. You know, are we even going to be able to hold it? Now, from here, we could go higher without digesting first. We could. But the amount of effort that it's going to take to keep that move higher is much greater than if we pulled back more first to digest this move. So we're on the edges of overbought, but we're not there yet. And we've been more overbought than this. So we could just hold the line and let the 10 come up to us. We could pull back to the 10 and get that reset that we need, or we could just keep stretching a little farther to the upside. But that would have, every one of those would have its own consequences. I did mention last week that I think now that I think we're done with this year-to-date VWAP for a while. I don't think we're going to go back and challenge that anytime soon. So if you're running, you know, ES futures, say like short puts, once we get past QRA and FOMC by the end of this week, you should be able to run some quarterly short trades. Whether we're going to do short calls or short puts yet, I would wait until we get the rest of the data. It seems like we're going to be either sideways or bullish, but we really need to know the issuances, and we want to hear from Powell. All right, so we don't want to assume we know it all yet. Nat gas, Bitcoin, and that's it. Well, that's not very inspiring. That's the only things we have to the upside. And to the downside, we've got China, whether it's MCHI or the Internet ETF KWeb, Energy, OIH, XLE. So kind of divergent. See if we can find, you know, it was interesting yesterday. I was watching the Trading Ticks. You know, it's got the bot that calls out the trades and it calls out flows, whether it's UOA or sweeps and blocks and that sort of thing. So I'm watching it come through and just kind of watching, you know, not really actively looking for a trade. And there was a lot of semiconductor stuff coming through. And you remember how we started yesterday, semis weren't doing so hot, you know. So it was AMD, NVIDIA, Intel, MU. It was kind of just a little bit here, a little bit there, and it just kept picking up more and more and more. And semis never did really do too hot yesterday, but the market started to turn around along those lows. You know, semis really just a part of the whole tech theme, right? What do we need for a rally? Tech and finance and consumer discretionary. Mostly tech, really. Just mostly tech, really. But those flows started coming in on that one sector, and then it just kind of blossomed out into other places. So when we say tech, it's kind of generic. You know, what kind of tech? You want semiconductors, communication services, you know, even healthcare tech and financial tech. So that's really where it all blossomed yesterday. So we got pot. Pot is leading the way, and behind pot, then we've got uranium, retail, and Bitcoin. Bonds aren't up enough. Gold was up, not was. Gold is looking for a long because it generally does well into FOMC. But I was reading on FX Street, which does a lot of gold analysis, and they were talking about the direct connection with oil and this whole idea of, a retaliation response to the 3 dead service members, and how that retaliation could have global consequences or consequences to the global economy, and gold getting bid up a little bit because of that. So 2 different narratives for why gold should go up, but both of those narratives did lean on the idea that they expect gold to go up. But for how long? Short-term trade, short duration. Right now, there's this blue line, which is an anchored VWAP to the highest volume spot. And if we look back here, that 191, 187, 191, it's just a really strong zone. Without even going all the way back there, we can just use this one big bar. This is the bar of control. And we're below the 50%. So this support needs to hold. And if it does, then we could try to revisit another long and then a breakout. We do have another, the anchor here. This is a year-to-date anchor. So VWAP just from the start of the year, we're underneath it. We're trying to get through it. We can get through that. Then the halfback. Then we look to get back to the high and then challenge it from there. This is a weekly chart, but I like it. If we can hold this support, I like it. And I don't have any moving averages on or anything like that. Do have the MACD down here, which isn't looking all that hot yet. It looks like it wants to roll over. But remember how we read this. MACD is above 0, so the primary trend is bullish. If these 2 lines crisscross, then the primary trend would still be bullish, but the secondary trend would be bearish, or it would be bullish under pressure. You can kind of say it a lot of different ways, but as long as we're above 0, the first word is bullish. Even looking at this fade here, the greater picture was still bullish. It was still above 0. So the fact that we have this lower high, that's a little bit of a concern. And the fact that it's looking like it wants to roll over, that we had a higher high in price and we didn't get a higher high in the MACD, that's a little bit concerning. This low really does need to hold. But in a short term, between now and FOMC, or even just as a day trade, we should see some reasonably decent moves. Gold, silver, kind of take your pick. Focus on the one with the better liquidity. Because remember, this is a weekly chart. So, there's a little something for everybody in the market. For things that are down, China, crude through USO, cloud services, more energy through XLE. And transportation really just has been having a hard time. It just can't seem to get going. I heard someone talking trash on Dow theorists yesterday. Not really talking trash, just kind of poking them with a stick a little bit. If you're a Dow purist, then hey, I don't have a stick to poke at you, but try to broaden your horizons a little farther than transportation. That's all I gotta say. It's not that you're wrong. David Keller from Stock Charts hits on transportation quite a bit too, and that is a really smart dude. So this was forming a really nice classic kind of cup and handle, but I don't think it pulled back enough. And so now I'm a little bit nervous about it, but I like how it stopped almost perfectly on the pivot. Remember we talked earlier about liquidity resides on the other side of the pivot. The thing is though, if you're looking for a breakout or a failure to break out, like a double top or a double bottom, you want it to go farther than the previous level and then fail. But if you want a breakout to continue in the same direction, then you want something like a cup and handle, because a double top is a rejection. It's a bull trap, and then we go down. So double tops are bear signals. Cup and handle is a bull signal. So that when we get there, we pull back, we get there again, we pull back and get that handle and continue to the upside on a breakout. Kind of want that equal high. So this is more of a cup with a handle and less like a double top. A double top should have broken through and tried to trick the bulls into getting in there so that we could rug pull on them and squish them. Notice, by the way, that the MACDs are fanned out really nice. They're not crisscrossing like they did back here yet. So I guess you could say that this is a cup and handle. Um, there's some rules to the cup. IBD did a really good job kind of laying out some of the criteria, how wide it is, duration, how long has the whole thing been in effect, and then how deep the pullback is, which is kind of what I was mentioning on the other one. But also, did it get up to the right level before it got its pullback? Sure looks like a cup and handle. I don't think you could argue. Maybe some pattern purist out there could, nitpick it a little too much, but yeah, I mean, that counts. I like it. The thing is, this and even the other one that we were just on, it doesn't really change anything. Like I wouldn't try to go long just because I have this cup here, especially on a weekly. It would just gives me context, right? This is a bullish pattern. I would try to find bullish opportunities. It's a good way to say it. I wouldn't necessarily run out and try to go long just because I happen to have a cup and handle. That makes sense. The targets for this, by the way, is you measure the bull and then you set them up. %50 and 100%. So you're looking at 485, 445 for my 1, 2, 3, 6. And then 485 for the halfback or the 50% measure of the bull. And then 100% measure of the bull, 563. Can you believe we're talking the Qs at 563? That just sounds crazy. I remember when they were 200 and something. So here's the weighted fangs. We can really use this, or we can use the NY Fang. The difference is this works in the pre-market and the NY Fang doesn't. So we're looking at, the Mag 7 or whatever you want to call them. They're at least positive enough this morning that we've got this very slight gap up. I'm on a daily chart. We've been holding this high now for the 3rd day, going into the 4th day, or I should say going into the 5th, excuse me. So day 1, 2, 3, yesterday was day 4. Now we're getting into day 5 of holding this range. The markets don't want to sit there forever. If it's some no-name Joe Schmo company, sure, but you get something like this, no, we're not going to just sit here and keep twiddling our thumbs. Something's going to give. Even back here, when we were holding the range started to get tighter and tighter and tighter and tighter. We had equal high but higher lows until finally something broke. And like wedges do, it broke to the downside. So yesterday we got to the top of this liquidity. The question is, are we going to finally get through it? Those sellers have been adamant. They've been holding the line and selling it off really nice, except yesterday. Same thing with these buyers down here. They've been defending underneath that 3-period moving average very strongly, even yesterday. And was it enough? So this is something I'm really watching this week. I want to see how this starts to play out today for any sort of a breakout. We can rally without the Mag 7, but we don't really get very far when we try it. Growth to value is down just a little bit. We closed at the high. We've gapped down marginally. We're still holding these highs. We're still above the 3. We got a little overextended beyond the 10. It makes sense. We're pulling back a little bit. Growth over value is bullish, right? If we were to lay this on top of the S&P, we would see, the market tends to go up when growth over value. So we got a little weak, but we are in unprecedented territory, right? We just put this on whatever time frame you want. We're up at that level, right? We're up at levels never seen before. So a little bit of a pullback is nothing in the grand scheme of things, considering how high up we are in this whole structure. This is bullish in the big picture. All these moving averages, nice angle. I mean, this is just pure bullish. Until that changes in the big picture, we're still looking at a strong market, or at least a concentrated market into the Mag 7, because this certainly looks more bullish than the S&P does. And after the move yesterday, we don't have divergence in the NASDAQ composite against the NASDAQ CVI, Cumulative Volume Index. We remember we had that divergence where price was going down, the index was going down, and then suddenly we had a change in price here. Drastic move to the upside, but the indicator kept falling, so we had a pretty serious divergence. Well, we're caught back up again. So cumulative volume index, it's the CVI. You can just hit indicators and check on it. And then IXIC NASDAQ composite goes with it. It's what I got for you guys today. really just, there's not a lot out there. And what is more negative than anything else, like the K-Web and really just a hurry up and wait kind of day with JOLTs. The S&P looks like it really does want to try to get this gap closed. So first get to the daily pivot point, then get that gap closed, then the China ADR, or not the China ADR, the ADR half. Gotta be careful with that ADR. It's in too many acronyms. But we're not looking at a market, you know, that's selling off into oblivion. I would be surprised if we get through the ADR half and get, say, to the low of yesterday. That would be way more than I'd even expect, but that'd be a cog line and a voodoo line, 49.11, 49.12. I'll see y'all tomorrow.